So this is part 8 of this multi-part video series for positional stock traders. I don't know how many parts this will become, but I am making videos in bits and pieces so that this information is easy for you to digest. See, slow learning is real learning. If you plant a seed in the ground and if you keep watching it on a minute by minute basis or hour by hour basis, nothing will happen. But if you plant a seed in the ground and you come to that after 3 months, 6 months, or maybe 1 year, and you keep watering it, okay, then something will change there. Okay, maybe a plant will come there. So that's real growth. So slow growth is real growth. So I am uh, taking this slowly. I am releasing one part every single day, and in each part, there is a new learning. So in this part, we will look at a bit of technical analysis on the weekly time frame chart. Remember, we already have Market Smith, so we don't need to spend time doing technical analysis because they have already done it for us. We just need to know where to look for, what to look for. Okay, which I will explain in today's video. In the previous two parts, we looked at fundamental criteria. So that is one way of shortlisting stocks for positional trading. Okay, once we have shortlisted the stocks using fundamental criteria, that is not enough. We also need to ensure that the stock is technically strong. There is a clear buy point available, there is a clear buy range, there is a clear sell range, there is a clear stop loss range. That is called technical strength. And in my view, technical strength is more important than fundamental strength. What is the point of fundamental strength when the stock is falling, not forming a base? So, this video is very important. First, you should check for each stock whether these criteria are available or not. Then I would suggest you go to the fundamental criteria. I should have recorded this video first and then I should have gone to fundamentals. But since this is not planned, let's take it the way it is going. Okay. So let's go to MarketSmith site. And what are the things to look for before even you check the fundamentals of a company? Okay. What are the things to look for on the chart? So you go to product, go to support, and I scroll down. Yeah, have a look at this. Okay. So what are the things available here? Let's say on this particular bar, just before that breakout happened, you are at this particular bar. The week has closed. This is a weekly chart. And after this, there is nothing. Okay. So now you have 5 things here to look for. You need a green dotted line. Okay. You need the green dark line, which clearly represents the pattern that is available. This is cup without handle. Okay. We will discuss patterns in this video. Okay. So you need the green dotted line. That's one. You need the pattern that is clearly drawn. That is two. You need the blue zone, blue shaded area. You need the red shaded area and you need the green shaded area. You already know how to draw this on the weekly time frame chart. So you are looking for 5 things. Remember, when you filter the stocks, open each stock chart in a separate window and check whether these 5 things are available or not before the breakout. Okay. So let's say this week has closed. So now you have the shaded areas. Now you have the dotted line, which is the exact pivot point, and you have the pattern that is drawn. Okay. So these are the 5 things that you need to check to shortlist the stock. So when you put the filter, there may be like 100 stocks that show up in that filter. Out of those 100, we only take out those which have these 5 conditions met. Just assume that these bars are not there. Just assume that the pattern is complete here. Okay. So these 5 conditions are met. Another condition you should notice is that, see this red line, that's the 10-week simple moving average. On our trading view, it is the blue line. Here it is the red line. But the price should be above the 10-week simple moving average and the price should be below the pivot point. So the current price, so this closing price, okay, this should be between the pivot and the 10-week simple moving average. Okay. Only then the stock qualifies. Imagine if the stock is below that 10-week simple moving average. That means it's probably trading below the 50-day simple moving average. We don't want that stock. That stock will anyways not come in our filter. Imagine if the stock has already broken out of that pivot point, then it's extended, right? See, as long as it is inside the blue shaded area, it is not extended. Okay, so if this day starts and maybe you are late by 1 or 2 days, you can still buy the stock as long as it is in the blue zone. But if the stock breaks out and then it pulls back to the blue zone, that doesn't mean you have to buy. Okay, just because it has come back to blue zone. Maybe it has come down due to some news event or something. You have to buy a stock as it is going up, not when it is coming down. Okay, so you have to buy the stock on this week, not this week as it closes near the blue zone. Because a lot of students ask me this question that I missed the breakout. Now it is coming back to the blue zone. Should I buy? Things like that. Don't do that. Keep an eye on the stock market every single day. If the stock breaks out like this, make sure you start buying shares. So remember this 6 things we need to look for: a clearly marked green dotted line, which is the pivot point, number one. Number two, a clearly marked basing pattern, which is the dark green line. Number three, the blue shaded area, the buying range. Number four, the green shaded area, the selling range. Number five, the stop loss range, the red shaded area. And number six, the price should be between the pivot point and the 10-week simple moving average. So these are the 6 things you look for to shortlist stocks. So out of 100 stocks that you get in your filter, a lot of those stocks would have already crossed the pivot point. So in this case, if you see, this is 22% from pivot in 11 weeks. So from here, in 11 weeks, it has gone 22%. So now this stock, we can't buy the stock here, right? So it will show at the top of the chart. I cannot show you any chart because there are regulations. I cannot show you stock prices with latest 3 months data, but you understand the point, right? At the top right corner, you will see this. If it is gone away from the pivot, just leave that. Okay. But if it says, okay, 5% to pivot in black color, okay, this is blue color, they will write, let's say 5% to pivot or 10% to pivot. That means it is still has to travel 5% or 10% distance to reach the pivot. And if it is above the 10-week simple moving average, then we have a clear stock ready to break out. Okay. The distance between the closing price and the pivot point could be anything. It could be 10%, 18%, 20%. It will always be less than 25% because in our filter itself, we have mentioned that the stock should not be more than 25% of the 52-week high. So whatever be the distance between closing price and pivot point, it doesn't matter. In daily time frame chart, we are very strict with this because we want the distance between closing price and the buy point to be less than 5% because that's the daily time frame chart. Here, that nothing of that sort is important as long as you have a clearly marked pattern and the buying, selling, and stop loss range, and the price is between the pivot point and the 10-week simple moving average. That stock can be taken for consideration. Okay, doesn't mean that when you have all the 6 criteria met, doesn't mean that you buy the stock. Okay, it simply means that it can be taken for consideration. So apart from this, you will also check the fundamental criteria. And when the stock meets all of our technical and fundamental and liquidity and comparative criteria, and the market condition is uh, confirmed uptrend or uptrend under pressure or rally attempt, in such cases, we are allowed to take positional trades. The position size might differ. Okay, so that is how you will look for. Another thing, remember, imagine all these 6 criteria are met, but on the daily, you don't see the blue, green, red moving averages. Like the price is not above blue, green, red. Is it possible? Of course, it is possible. Here, you have all the 6 criteria met. The price is already above the 10-week simple moving average. But when you go to the daily, instead of blue, green, red moving average, you have blue, red, green. Stay away from that stock. Okay, it's risky because it doesn't meet the basic Mark Minervini criteria. Okay, so this is whatever I'm teaching you. This is a blend of Mark Minervini and William O'Neill trading and investing philosophy. So just because it is showing nice pattern here, if it doesn't meet the Mark Minervini criteria, in most likelihood we are going to reject that stock. It's because there is too much risk in that. Okay, so you see how strict we are getting with our criteria, because this is positional trading. This is like you might put 10-15% of your portfolio in one stock, because we are trying to put all the odds in our favor, right? So when you are putting large chunks of your portfolio in a stock, you have to be extra careful. You have to impose stricter criteria on the stock. Very often it happens that the all the six criteria here are met, but you don't see blue, green, red combination on the daily time frame chart. So which means before taking this trade, just confirm that the stock is really in a confirmed stage 2 uptrend, which is price above the 50-day, 50 days above the 150-day, and 150 days above the 200-day simple moving average. So the more strict you are with your criteria, the better the quality of the setup you will be trading. Okay. Now coming to patterns. So if you scroll down, you click on Investing University, then you click on How to Buy Stocks, then you click on Learn More About Bases and Patterns. Okay. Then you click on the three most common chart patterns. So see, the first is cup with handle. So it looks like this. Don't go into the details, because you don't need to go into the details, because it's already marked for you. Okay, let me explain. So this is how it looks like. There is a cup, there is a handle, and that's the buy point. So if we scroll down, see, this is a variation. This is a cup without handle. So with cup patterns, there are two variations: cup with handle, cup without handle. Okay, see, this is nice cup. So this will be marked on the chart. This is Pfizer weekly chart. This is an old time frame chart. So as per regulations, I'm allowed to show this chart to you. So you see there is a nice cup, there is a nice handle, there is a nice pivot point that is being marked, and that's the buy price within 5% of that range. Okay. And then the stock begins to go up. This is the daily time frame chart. The weekly chart looks like this. The daily time frame looks more broad. So that's the breakout. Look at that blue color zone. That 5% zone is the place where you start buying shares. Okay. TVS Motor weekly chart. Okay. See, this is a cup without handle. See, it is written here cup without handle. See, that's the buy point. You buy here, then the stock continues to remain above the 10-week simple moving average, except for one or two candles here, which are low volume candles. So nothing to worry about. Okay. Then you come down. This is TVS Motor daily chart. This same chart looks like this on the daily. So on this day, you have that buying opportunity. Coming down, click on the second one. This is the second most common pattern. This is a double bottom. So that's the pivot point. So 5% buying range. Come down. Dhampur Sugar weekly chart. So it's clearly marked for you. The buy point is marked for you. You buy here. See, you don't need to learn the pattern. See, you are a positional trader. You don't have time. That's why you have become a positional trader. So instead of doing all this analysis manually, why not just get the Market Smith application, which is very cheap, by the way? It is very, very affordable. Get the Market Smith application. These patterns are already marked for you on the chart. Open any chart of any stock, you will find these patterns with the buy point. The only thing you have to do is to do the shortlisting properly, okay, the filtering properly, and the execution properly. Okay, even the stop loss range is given to you. What else do you need? Okay, this is like spoon feeding. So that's the breakout. Then that daily time frame looks like this. That's the double bottom. Here there was a cup without handle, which did not work out. Stop loss got hit, but here it worked out. There was a buying opportunity on this particular day. Another double bottom is there here. It is marked here. There is the pivot point. Could be bought here. Look at that blue color zone. 2-3 weeks it stayed in that zone and then it shot up. Okay. Look at this coming down. The third most common pattern is a flat base pattern, or a second. Normally it's a second stage. This is called as flat base. It's written here. Second stage means base number 2. Okay. Normally, first stage like base number 1 is cup with handle, cup without handle, or double bottom. But flat base is generally uh, base number 2. So you see this, there is a nice cup here, then there is a handle here, stock breaks out, then the second base is the flat base. Okay. Tight price action, there is the buy point. Again, tight price action, there is a buy point. Tight price action, there is a buy point. So that's the flat base. Then Canfin Homes, the same stock, daily chart, it looks like this. There is an opportunity here. There is an opportunity of buying here. Okay. So the three most common patterns are cup with handle, double bottom, flat base. Majority of the trades that you take on positional weekly time frame charts will come under one of these three categories. Cup with handle, cup without handle, double bottom, flat base. Okay, generally double bottom and cup with handle, cup without handle comes in early stage, stage 1 and 2, like early stage base. Okay, not stage 1 and 2, it's base 1 and 2. And then flat base could come in second base, third base, fourth base, and so on. There are other patterns like things like high tide flag, then there is ascending base. Those are not very common patterns. This is the main thing. Okay. So the point I'm trying to make here is, since you are a positional trader, you don't have time to sit and do analysis of weekly charts. The pattern is already marked for you on the market smith chart. You just have to ensure that six criteria are met. Apart from that, on the daily time frame, you should have blue, green, red moving averages. Okay. This much technical analysis is good enough to shortlist stocks. Then you go into comparative, like is there a blue dot in the on the relative strength line? What's the comparative strength? What's the liquidity? Technically, how the base is set up? How far is the stock from the pivot point? Those things will come later. But for shortlisting, at least, you find a stock that meets the six criteria that I have mentioned in this video. Maybe rewind the video to watch it again. Note down the six criteria. You will shortlist stocks based on this technical six criteria, and you will shortlist stocks based on the fundamental criteria which we discussed in the previous two parts. Okay. And when you find a stock which fits the technical fundamental, then you look at liquidity, comparative, and market analysis. Then take a trade execution decision and manage the risk. Okay. So don't study patterns. If you want to study, read William O'Neill's book, but it's already marked for you. So don't waste time doing technical analysis. More than 50% of your work is already done by the website. So this website saves me a lot of time and headache. Even the base count is given. I mean, what else do we want here? Okay. I'll see you in part number 9 or 8. I don't know which part this is, but things are going well in this video series.